Okay. Okay, welcome and welcome to our training. We've actually quite started a little bit. So now today's class, we're going to be talking about breakouts, right? So we're going to be talking about how to trade breakouts, how to spot breakout probably before it happens, and see how we can take advantage of market movement. Now, essentially, breakout is kind of a system where we look for trading opportunities. We look for the markets to react around, let's say, support or a resistance area. So when the market is approaching a key level, there are one or two things that could happen. The market could break above it, or in the case of, or break below it, whichever the case, or it could respect it. Now, irrespective of what the market does, it will provide us with opportunity. Now, but the one thing we want to try and do is we want to, be able to anticipate to some extent breakout. We want to be able to see, okay, do we expect, is this market likely going to break out, and probably start planning towards it. Now, so what I mean, we know things for a certain that when the market moves in waves, right? So when price is moving, with my pattern, so when price is on the move, price don't move in a straight line, so it moves in waves. And so what you find is you find price, bouncing around several regions, right? And so at some points, you see areas where the price has reacted to, eventually the market will likely break out of them, right? Now, so we know that price move in waves, price move in patterns. But here's the thing, we want to be able to, profitable trading is all about being able to anticipate market movement and then trade in the direction of price before price actually gets there. So we want to be able, so if we anticipate that price would appreciate, they want to be looking to buy before the price actually appreciates. Then is when we make money, because if we don't buy and the price appreciates, even if we anticipated it, well, no money is made. So we only make money, we make money in the markets when we anticipate market direction and then trade in the direction of price. Now, a common phenomenon that you find is that, so I talked support and resistance the last time. So when we have those levels of support and resistance, so let's assume that we have, so let's assume that this is resistance and that this is support, right? So that is resistance and we have support, something like this, right? Now, if price is trading within this range, ideally, in an ideal world, price will continue to bounce around resistance, bounce up from resistance, bounce up from support. Price, when it gets to resistance, it should reject it, and then when it gets to support, so the whole idea is, well, resistance and support in a perfect world would hold indefinitely. Now, we know that that is not true. We could have resistance and support area hold for a long period of time, but eventually all things breaks, records are meant to be broken. So in many cases, like you find, price tends to break out from either a resistance or a support. So ideally, normally when price is approaching a resistance, we start looking to see if we could probably find a rejection and look for selling opportunities. And as price is approaching a support, we look to if we could find rejection as well, and then look for buying opportunities. However, there are times where the price, where markets would, is done reacting to this area, and then what you find is price would break above either the resistance or support area and continue to move. Now, those situations where price break above resistance or break below supports is what we call a breakout, right? Now, a successful breakout is one where when price breaks above resistance or breaks below support, price then continues to move, in that direction. So when price breaks above resistance in a successful breakout, if price breaks above a resistance area, we want to see price continue to move higher. And then in successful breakout below support, we want to see price continue to move lower. So with this anticipation, when price breaks above a resistance, we are looking to buy the market, look to take advantage of these opportunities, and also take advantage of the selling opportunities when price breaks below support. Now, but here's the thing, I'm sure for some of you, you'd have seen several things like that, where the market appears to, so fake out is a different discussion entirely, but that is also one key thing that maybe I'll talk about it in some later class. where price would appear to have broken above resistance only to close back below it and continue to head lower. So this is something that happens, that you find happen in markets where price does what we call a fake out. But today we're looking at breakout and how to spot breakout opportunity, or how to anticipate a breakout structure or breakout that is impending or pending to happen. Now, here's the thing. Remember, let's assume we're looking at a breakout above resistance. Now, there are no hard and fast rules. There are no holy grail trading system or anything, and doesn't necessarily mean that you find this work 100% of the time. But here's the thing: when price approach a level, let's say resistance in this case, how price react around that level can give us a clue as to whether price would eventually break above, or if the resistance level will hold and price would reject that level. Now, if we find the sign that price is likely going to break above, then we can start preparing for the breakout such that when it happens, we anticipate and take advantage of this move. Now, market structure, is there anybody here that doesn't understand what I mean by market structure? Well, market structure is such that in an uptrend, price will continue to make higher highs and higher lows, right? So price will making higher highs and higher lows. You could see how the next high is higher than the previous high, and the next low is higher than the previous low. So this is market structure for a bullish trend, for an uptrend. Now, in a downtrend, you'll find that price is making lower lows and lower highs. So the structure is also different, but it's same. It's a quite clear structure. Price will making lower lows and lower highs. Now, market structure is one key thing we pay attention to when we're trying to identify or spot a potential breakout. Now, so when price is approaching a resistance area in this particular example here, and then price gets to resistance. Now, in a perfect world, remember we said this resistance will hold and price will come back down. But when we find that price is refusing to come back down, price is just continually testing this resistance area, that could serve as a potential sign that price will eventually break above. Now, there are several, when and if it will happen is up for debate, but this can give us a clue as to what is potentially going to happen. Now, when you think about price going up or price coming down, what I want you to think of is, think of buyers and sellers. So when you see price going higher, what it means is there are a lot of buyers, there are a lot of buying pressure, and so there's a lot of demand and price is heading higher. However, when you see price coming lower, then it means that there are a lot of, there's too much supply and a lot of people selling and price is coming down. Now, if there are more buyers than sellers, or if there are stronger buyers than sellers, you see price appreciate. Now, support and resistance areas, we see these zones as so key areas where the market don't want to break above or break below. Now, when price is approaching, let's say, resistance in this particular example, so when price is approaching a key level of resistance, and we notice that ideally we want to see this level being rejected. But instead, we see that price is continually lingering around this level, right? And then maybe forming some kind of price structure. This could give us a clue as to an impending breakout, such that when that breakout occurs, we'll be looking to take advantage of the big move to the upside. Now, I'm going to give an example. Now, there are several ways to look for this, but here's one thing I like to pay attention to. So when price approach, let's say, level of resistance in this case, and let's say what you find is most times price will reject that level. But again, you'll see buyers challenge that level quickly, right? And then maybe you start seeing, you probably see this happen maybe a couple of times, maybe it might happen a few times, but price would reject that level. Again, you still see buyers putting pressure on that level. So instead of market breaking below here and making the next move lower, rejecting this level, instead you see buyers continually trying to hold price up. So when you see this sign, this will give us a clue that there are lots of bids, there are a lot of buyers stepping in to defend price from going lower. And so what will happen is at some point, sellers might give in, especially with people with stop loss being hit and all of those things. And then we could see the breakout. Now, when we see this kind of thing happening, especially when we find market structure within this part, within this frame, then this could give us some clues, some insight about potential movement. Now, there are several. I thought about chart patterns and how to identify chart patterns and all of those things. Those chart patterns might come in handy here. So I talked about some chart patterns that will come in handy here is something like the flag pattern, the inverse head and shoulder. Anyway, not inverse head and shoulder, so chart pattern, wedge pattern, and all of this. So we know that a flag pattern would look something like this, where the market starts, moving within a channel, but still being constructive. And then when price break above here, we could see price move up, right? Now, on the other hand, one key one I like to pay attention to is market structure around this region. Now, so if price gets to resistance and you see sellers defend that level, again, you see buyers push price up, we test that area, but sellers reject that level. But this time, sellers were not able to take price as low as the previous time. Again, you see buyers push price up. Again, sellers push price down. This time, price is also struggling to go lower. Now, this is how a wedge pattern is formed, where you now find that even though price is making equal highs or around equal highs, but it is making higher lows. So anytime buyers push price back to resistance, sellers try to defend it, but they don't have enough juice, enough strength to take it much lower. And then buyers step in and push price up, creating this higher highs, higher lows conundrum here. Now, usually what will happen is at some point you will find that buyers would break above, and then we will see this move to the upside. So being able to, the whole idea is being able to spot this while it's happening so that we can anticipate this when it does occur. So being able to spot this while it's happening so that we can anticipate this when it does occur. Now we'll look at some examples in the charts, but you get the whole idea. I'll come back, I will look for some examples in our chart, but you get the idea. Now this could be a wedge pattern. It could also be something as simple as just a ranging pattern, but price refusing to go lower. It could also be, let's say, something like a flag pattern. So price forms something like a flag, and then we start looking for the breakouts above that area to look for the trading. Or it could also be something as simple as a break of structure within the lower time frame. Now, the same, just because I'm using using break above or break above resistance, the same principle applies when it's challenging support. So if we're looking at price challenging a support area, it will still be the same idea, just be in the opposite, that just be the inverse of what I just talked about here now. So let's say price is pushing down and comes down to a support and is looking to break below, we will still be looking for the same kind of price pattern. So we want to see price maybe making a wedge, which would then eventually form this breakout to the downside. So this would be the wedge, something like this. You can see anytime sellers push price down to support, buyers push it back up. But each time they fail to go to take out previous highs. And eventually the market breaks lower. Now, so far, I hope we understand the idea of what I just discussed, right? I hope we understand the idea of what we just discussed. We could also still look for the bearish flag pattern, where if the market breaks below the support, then we could see price continue to head lower. Also, we could also look for ranging patterns within here, where price keeps putting pressure on this area, and then when it actually does occur, we would see the breakout and the move lower. So what I want you to keep in mind, what I want you to pay attention to is this. Our job, right? Our job is not to trade this range. So when price is when price is forming the pattern, it's forming this wedge pattern, it's not our job to anticipate, maybe start looking to sell. So I want to start selling early so that I'll make more profit. Because there is no guarantee that the price would continue to move lower. The confirmation is going to be when we break below this key level, and then we can start trading. Because there's nothing really stopping price from, continue to form this wedge pattern, and then it can break higher. So if you were now obviously selling, you find yourself on the wrong side of the market without confirmation. Now, obviously, even when the market breaks lower, there's also some possibility that it could continue to head higher. But then, you would have, you would filter out many bad trades if you just wait for the pattern itself to form, to complete, right? Now, another pro tip I might also give is this. So let's say this price, right? So let's say this is a daily chart. This price movement is on a daily chart. And then price has approached a key level, but is struggling around that level. What you can then do is go to like a 4-hour chart, not a 1-hour chart. Go to like a 4-hour chart and look to see if you could find market structure that is bearish. So in this case, market structure that is bearish, and then try to anticipate the move lower so that once it occurs, you start looking to sell to the downside. In the case of the bullish market, once it occurs, you start looking to buy to the upside. Okay, now let's go and see some examples. Let's see if we can spot some examples on our chart. So far, I just have one person say they understand and it's clear. I hope everybody also understands because, okay. Now let's look at our chart. Let's see if we can spot. Now the concept applies on every single time, every single currency pair. I would every time frame I would say, but usually for patterns, I usually like to pay attention to them on higher time frame because then there's enough data in terms of enough information to kind of anticipate that, right? So you want to in my opinion, trading on the higher time frame or looking for these patterns on the higher time frame would give you much clue. Now, even if you're not going to trade it exactly based on the higher time frame parameters, but spot it on the higher time frame, wait for the breakout on the higher time frame, and then trade it based on your own preferred system. Now, let's see if we can. So first thing is first, we want to see price testing a key level. Now, based on our support and resistance training, let's just quickly run through that. So based on our training on support and resistance, we know how to do that. So let's look at a key level, something like this. Let's see. So you could see, now I'm going to just use this because this seems to pass the bill. Now you could see how this is a key level, right? So you know what I mean by key level. See how price, this is served as support here, it served as support here, it served as support here. When it broke below, it served as resistance. It was resistant all through here, right? So if we go back and look through, we would likely see that, let's see if that area remains valid. Okay, so let's see. You could see again that same area served as support down here. So this is the key level to pay attention to. Now, here's what it means is why price is above this area, right? Why price is above this area here, anytime it comes as low as here, it tends to bounce off. You could see it several times. Next time price came here, it bounced off. The next time it came here, it pushed up. And then eventually, let's zoom in here. Eventually, price broke below, right? So you saw in the past that area was serving as support, but then eventually price broke below. Now, when price broke below this time, watch what happened. The markets came toward this area, but unlike the previous example, where it immediately rushed back up, this time price was on, buyers were unable to defend. Here they defended the level, pushed price up. Here they defended the level. And here when price was coming down, they were unable to push price back up. Sure, they tried to push price back up. You could see they pushed price up, but only to come back to it again, they pushed price up, and then eventually the market broke below it. Now, when price broke below it, it came back to retest it as new resistance, and you could see how the market fell from that area, right? So you could see this is the anticipation here. we're anticipating, this is where we wait for the anticipation, we anticipate the breakout because we see how price is reacting around this key level. And so the moment price broke below it, you could see how that previous area that served as support now became resistant. So you'd have been able to anticipate this breakout, and then once it occurred here, this is where the breakout occurred, you'd have been able to wait for, probably look for a retest and then a push. Now this one broke out, it did not immediately retest, but it did eventually retest. So it broke out and then went lower before coming back up to retest before making this move. So successful trading is mostly about being patient, waiting for this price to come to you and then pulling the trigger. Now, you could also see the same thing here. So this was where we spot the breakout. So there are several people who, when price gets here, they'll start buying, anticipating that, thinking that price will go back up because this is a key support level. Why price could do that? The price pattern or price action did not suggest that price was likely going to do that. Now, look at here again. So this is another example of when that kind of thing doesn't occur. Now, this area has been serving as resistance. Now, it was support all through here. In this particular scenario here, that same area is now serving as resistance. Now, notice how price also tried to retest that level multiple times, right? So you see price try to retest this level multiple times. Now, this is where somebody, if you're looking at this and you say, so Mr. Obin has said he wants to see price reacting around this area, then price is going to go up, right? So it has been reacting, so I'm going to start buying because I feel price will go up. So let me start buying early so that I can make profits. You can see what happened in this case. Even though we had multiple reaction, you want to wait for the confirmation where price breaks above on this side before you start buying, because if you started buying before then you see that, well, price now changed, it didn't break above, it now went lower. Now, with that said, there's also another example I can see here as well. So let me clear this. Now also look at this as well, right? Look at this. So you can see that same area served as resistance, and then after price going all this way, started serving as, price is coming back to it. And what happened? But you could see how price is, made a low. Okay, so let me zoom in so we can see it better. So let me zoom in. So let's zoom into this region here. So you can see how this, price is approaching that key level again. And this time when price got there, it's rejected it. Sellers tried to defend the level, but they were only able to push price this low. And then buyers came back, pushed price back up again. And what happened? Sellers pushed price down again. But this time, notice that they were unable to take out previous low. And eventually, this is where the market broke out. The market came back to retest it here. And what happened is history, right? The rest is history, as they say. So the idea is this. You saw the market coming up to this level. The market started playing out in a wedge, eventually broke above, and then boom, we had this push all the way to the upside. Now, in this particular zone, so let me just pick up a rectangle to here, and let's just highlight this area, right, before the market broke above. Now, if I go to, let's say, the 4-hour charts, let's find that area back. If I go to the 4-hour charts, is that behind? Okay. Just let me find it. Okay, so this is it. So if I go to, this is the 4-hour chart, and let's zoom into that area, right? Now, what you notice here is, well, there are more candles here, obviously, but then you find that this is what I mean when I say the market is making, it's making higher lows, even though it's making equal highs. So price got to resistance, sellers pushed it down. Again, buyers pushed it back up, right? And then sellers pushed it down. before buyers eventually broke above, came back to retest it, and then the market went up. So on the 4-hour chart, I've been able to clearly see. So if I were to draw a trend line here, you would see the wedge pattern forming. So this would be our wedge pattern looking something like this. So let me delete this one. So you see our wedge pattern looking something like this. This is a wedge because it's making equal highs, but it's making higher lows. And eventually the price broke above, came back to retest it, and then price went all the way up. Now, the anticipation, the reason I would have, the reason a good trader would have been able to look for, anticipate this movement is if you spot the patterns in the chart. Now, if we keep going, that same area, you find that, so let's see, you can see again, the next time price came back to that level, price bounced off. Again, price came to the level, price bounced off. Now, this was one trade that I talked about. So this particular trade here, we did make a lot of profits trading this movement here, trading this buy from this zone here and trying to take profits all the way up. So we did this twice, especially for those of you who joined me in my trading room. We traded this 200 pips. Again, price got here. We traded this, I think, about 200 pips also as well. Now, currently, price is still at that area, right? So now this is where, if you start spotting price patterns, if you start spotting patterns, if the market continues, so let's say, let me draw this like this. Even though I'm more inclined to be bearish, to be bullish in this particular scenario. However, if the market continues to wedge lower, there's really nothing stopping price from coming down lower. So this is what I mean. If price continues to stay below this trend line, if price continues to reject this trend line, you will notice that it will continue to make lower highs, which would likely mean that we could see price break lower. On the other hand, right, this is the reason why you don't just start selling because you're anticipating the breakouts. You want to see the breakout play out first because the price could definitely break out above here and then continue to head higher. So this is why waiting for the price or the market to come to you is key. But you can start anticipating the movement once you can spot the patterns in your chart. Euro USD, let's look at Euro USD quickly. I think there's a good example there. Okay, so if I do this, let's just take a horizontal ray and drop here like this, right? Now, this is a level, so let me use the trend support line. So let's zoom out, see if that's the key level. So this was resistance back here. You could see how that area, this was resist, support, resistance, support. You could see how this area is key, right? And then market came to the level, right? So this is the breakout has occurred, right? So you see market bounced down to the level, buyers pushed price up, right? Again, market came down, buyers pushed price up. But each time they are unable to take out the previous highs. So when price bounced up from here, it refused to take out the previous high and it came back down to retest support. Again, buyers pushed price up again, but this time too, they were unable to take out previous highs. And what happened eventually was the breakout. So if I go to like the 4-hour chart on this, for example, you'll be able to see the pattern I talked about here. So this is, so something like this, where we can be looking for this, right? Even though ideally this particular breakout did not take as much time, usually I want to see this price react around this region for a couple of times, maybe touch this trend line maybe 3 or 4 times. But in this case, you could see how each time price came to this level, buyers pushed it up. The next time it came back to this level, they pushed it up, but they were unable to take out the previous highs. And so eventually, as of yesterday, we had this breakout. Now, based on this, now on Euro USD, I am bullish considerably to a considerable extent to look for price to come up to this area. However, I also have to respect the fact that with these breakouts, there is really nothing stopping price from coming back down to these areas here. So we could still see price come back down to this area. We could also see, so there are two breaks I'll be looking out for. We're looking to see if we get a break. So these are two key levels. We find price, come back to retest, maybe before eventually breaking above and going to my overall destination, right? But here's the idea. With this breakout now, I have to anticipate, I have to start looking for selling opportunities to try and at least trade this back down to here. And then if we do change structure and break above this region, then I'll be looking for that move higher. So right now, as it stands, you know, even though everybody's looking at this and thinking, well, the Eur Usd is going down, you know, that you don't be surprised if you see price go back up, retest this area before eventually coming back down to balances out, right? So this is exactly how you anticipate breakout and exactly how you look for trading opportunities to trade the market. So let's say we go to the 4-hour chart now. Then if we start seeing price gravitate back up and start coming up to this region, this 15-20 region, and then any rejection from here could serve as a potential bearish confirmation. I will start looking to take the price back lower. Okay, so far we've discussed the handful. I hope you're able to at least grab some things from the things we discussed. Anybody has questions, I could quickly take on while we're still here. But first of all, let me know if you, at least do you understand the concept of what we just discussed? And then did you enjoy the training itself? So your questions or your comments, let me know. Okay. Good. So this is on spotting breakouts, right? Very good, Claire. Yeah. Okay, that's nice. So trying to anticipate breakouts before your calls, so that once your calls, we can then take advantage of it and move forward. One other thing I'll talk about maybe at some other points is how to avoid fake outs, right? There's no way you probably avoid all the fake outs, but you want to be able to avoid as much as you can. Maybe I'll have a different class to explain that maybe sometime later. But this is how we anticipate the market breaking out and then try to take advantage of the move in the markets to make some pips. Okay, any question? Okay, I'm going to take your silence as no questions, in which case, I guess we're done. I'm going to stop this.